Good morning. Welcome to Stock Market Today for Wednesday, March 10th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished higher on Tuesday, led by the growth and momentum stocks and a little bit of a turnaround at the factor level. Consumer discretionary and tech outperformed, while energy and financials paused in their recent strong rallies. Treasuries were mostly stronger, with the curve flattening following a 3-year note auction. The dollar weakened on the major crosses. Gold finished up 2.2%. WTI crude was down 1.6%. on the day. As we get to the desk this morning, S&P futures are up 10 basis points. It's a mixed bag across other markets. That's after Asian equities were mixed overnight, finishing off their highs. European markets are slightly higher on the day. Treasuries are weaker, with the curve steepening ahead of a $38 billion sale of 10-year notes today, and with all eyes on the February CPI report this morning. Dollar is stronger versus the yen, flat on the euro cross. Gold is off 30 basis points. Crude oil is up 30 basis points to kick us off on Wednesday morning. That starts out after support held. And so we've been identifying the levels. We've shown them to you. And for SPY and Qs, the key near-term support levels held. For SPY, it's 370 to 380. Traded down at 370 tail end of last week, early this week, and then bounced from those levels. Qs, we've talked about 300. We're there. We bounced from that level yesterday in a solid way. Ideally, now we'd like to start to see some follow through to the upside to really cement the hold of support there. IWM came close to testing the top end of the near-term support range, which is 200 to 210, then down below 160 to 170 are key to the trend. SPY has upside potential to 413, still our base case. So our base case right now is leaning towards support holding. However, we are mindful of the fact, as we started to point out late last week, that the trend is wavering. Wavering does not mean broken. Wavering means wavering, consolidating after a strong uptrend off the March lows. So what does that mean to me? Well, with the base case is that support is going to hold. I think it still makes sense to be doing the work for ideas. However, I think you want to really be selective, premium setups. This is not December, January anymore, where you can buy pretty much anything and it went up. There was a lot of just kind of flow and momentum in the market in December and January. It was kind of easy to buy something and make money. That's not the environment right now. So being selective, I think, is really important. Focusing on, trend and relative strength and making sure stocks are at or near oversold levels. And more importantly than that, solid risk management process, because wavering can turn into broken at any moment. And, the point is, and that at that point, the key is going to be managing risk and preserving capitals if it was to play out. Not the base case right now, but certainly a higher probability than it had been in the past as these key support levels are tested. So if we kind of think in terms of probabilistic frameworks, the odds of a break with the trend wavering have increased. While not the base case, they've moved up. So risk management does become important in my view. It's always important, but you're not going to get away with mistakes now. December, January, it kind of felt too easy. It's not easy anymore. All right, let's hit our market in a minute. What are we writing about in the note today? Well, key support levels hold, choppy trading persists. And remember, this has been our view. In a note to clients on Sunday, February 28th, I highlighted what happens to markets after a sharp spike in rates, and you get choppy activity out over the next, call it 15 days or so, 15 trading days. We're in the midst of that now. So choppy trading persists, key support levels hold. With that, sentiment has moved in the direction of fear, but is not at an extreme that would warrant some sort of contrarian opinion at this point. Home construction begins to lead again, and that's kind of interesting to me. The U.S. dollar trades into important resistance, and as I said, futures point to a mixed open here today. Now, as we look at the major indices from a power bar perspective, Dow tacked on 11 basis points. It was the underperformer yesterday as the growth and momentum trade took center stage for the day, at least. 9-5 bulls to bears on the ratio. S&P 500 up 1.4%, 143 to 44 bulls to bears. So some strengthening there on the day. NASDAQ, your big outperformer, up nearly 4%, but still not enough to flip the ratio back to bullish just yet, as we are at 18 to 20 bulls to bears there. Small caps outperformed relative to SPY, 774 to 237 bulls, bears, bonds uptick, sending yields lower. Consumer discretionary, your outperformer on the day, up nearly 4%. Thank you, Tesla. 16 to 3 bulls to bears in the discretionary space. According to the Chaikin Power Bar, small cap stocks and large cap stocks do remain bullish. The major indexes are mixed. So looking at home construction, home builders, et cetera, you're going to see a lot of that today. Toll is our stock that we're highlighting. Bullish rating, closed down 43 bips yesterday. Strong trend above our rising long-term trend line and in a strong industry group, household durables. What I see here is a stock that's outperforming, with the intensity of outperformance beginning to tick up as our overbought, oversold indicator rounds out of an oversold condition, while Chaikin money flow remains bullish. So bullish stock, outperforming, exiting oversold, right? Tagged the trend line here and bounced as it consolidates just below 52-week highs, right? That's a compelling setup to me. So when I talk about being more selective with setups and ideas, really kind of higher quality setups is what we should be looking for. Not looking at names that are extended, looking for these names that have kind of pulled back, held support, and have already stabilized, right? Again, not catching the knife. We've seen some upside potential here over the past few days within a name like Toll Brothers. Let's hit our sector tracker now. Movement over the last 5 days. Energy still at the top of the list. Utilities have moved up of late, and that's not something you really want to see. But it's there. Fins, staples, industrials, in the top 5. Materials, REITs, and construction also, and communications rather, also higher. Discretionary, despite the big bounce yesterday, still down over the last week of trading. Healthcare and tech round out the list, with tech at the bottom of the list as it's been under pressure. We know why. We've talked about it. Everybody's been talking about it. There's nothing new to add there. So we're not going to belabor the point. A lot of back and forth, a lot of ebbing and flowing. We're choppy trading following a spike in rates. That was what we talked about over 2 weeks ago. All right, let's move to our industry in focus, which is home builder services here. And then later on in the show, we're going to look at construction, ITB. But home builder services, remember, is a little broader. It's not just the builders, but it's the entire supply chain. So you get names like Whirlpool in there, Home Depot, Lowe's, et cetera. Past 6 months, been a solid outperformer, leading the S&P by 11.5%. Power bar ratio looks at future potential, very strong, 13 to 3 bulls to bears. It's currently ranked number 8. 21 subsectors, having moved up 4 slots over the past week. So some compelling names there that might warrant, or some names that warrant extra attention. Century Communities, CCS, Pulte Homes, PHM, and MHO, M&I Homes, all very bullish. Obviously, I highlighted Toll Brothers as well. So let's take a look at. I apologize here. I missed the chart, but we'll take a look at the chart in just a moment. But home builders are interesting because they are rate sensitive. So let me drop the chart in here. You can kind of get a sense for how the sausage is made today, as my linked file here did not update. Let's drop this in and take a look at it. I apologize for that. I try to link these things, and sometimes the link doesn't take. But we'll take a look at the home builders now. XHB, you can see a solid trend. Looks very similar to the Toll chart, right? Check back to the trend line and moving higher. Bullish ETF that is outperforming. And importantly, I like to see the intensity starting to pick up. Money flow bullish, right? So 13 to 3, strong trend above the trend line, which held. So apologies for the unlinked chart. We're back to linked, and you can kind of see the structure. So depending on how you want to look at it, taking stock selection view, there's some names to look at, just bigger exposure to the space. You can look at an ETF like XHB. Let's move into what's trending now, yesterday's movers and shakers. So, Tesla, now the second largest weight in discretionary, up 19.5% yesterday plus on an upgrade from a firm that I do not know. Enphase caught an upgrade from Raymond James. That stock up 12%. Remember, that name had been under pressure for a while now. Teradyne reverses some recent weakness, up 8.5%. Etsy, part of the growth group that was strong yesterday. And Lam also moving higher on the day. Remember, the semis have been under a little bit of pressure as well. Loser side of the board now. Let's take a look at what's happening. APA provided an update. Investors didn't like what they heard. Add into that the fact that energy gave a little bit of their recent strength back. APA comes in 6.75%. Disca been strong of late, so a little bit of profit taking there. National Oil Well Varco, part of the energy complex, down 5.3% yesterday. HBI, nothing company specific. Same with Valero, but Valero's in energy as well. So what I think you're seeing here, or what you started to see yesterday, we'll see if it continues, a little bit of profit taking in some of these extended cyclical areas of the market. Makes sense. Nothing goes up in a straight line. But, the trends that we've discussed and kind of been in front of are still very much intact. So some ebbing and flowing as the market sorts itself out following that big spike in rates. And this is exactly what we said is likely when we wrote it in our note on February 28th, when we did a study of what happens in the equity market after a rapid spike in the 10-year yield. So for those of you who get our notes, go back and check what I wrote on February 28th. It's pretty much playing out thus far. The flip side of that is when you kind of, after that near-term choppiness, generally gives way to strength in the equity market. That remains to be seen, but we'll take a look as it plays out. All right, let's move into the charts now. Sentiment moves slightly towards fear, and the strongest uptick in the 13-day moving average of the equity put call ratio that we've seen in a while. Upticked from spot 4.4 last week to spot 4.7 this week, primarily as that growth trade has come off. Now, that being said, we're still in a position of excess greed, and that's a position we've occupied for nearly 10 months now. So you're not a ton to say there. And, the bifurcation being the fact that the VIX just can't get below 20. I realize that I sound like a broken record that just gets played every Wednesday morning, but that just is. And, we don't get to, the market doesn't care what we want. I'd love for this to change. I'd love to be able to say something different, but the market doesn't care. What the market's going to do is it's going to do what it wants. And right now, options traders remain excessively greedy while the VIX remains bid. And there's no two ways about it. That's just simply the case. I wish I had more to say. I don't. So I'm not going to make something up. All right. So the three on my radar as it relates to kind of the market and what I'm watching are the dollar, the 10-year bonds, or the intermediate term bonds, really 7 to 10 year, and the Qs, right? And so the dollar has been the inverse correlation trade. As the dollar has weakened since March, risk assets have rallied. And with that, IEF, the 7 to 10 year Treasury bond ETF, is not a risk asset. So as the dollar has faded, so has the Treasury bonds, right? And now we're seeing yields move higher. However, as we enter 2021, arguably the most consensus short trade was to be short the dollar, and the market doing its job as it usually does, failing to reward an overly crowded trade, right? I mean, everybody's short the dollar coming into the year, right? Everybody's massively bearish the dollar. And what do? We chop and start to go higher. Dollar trades into, this is the dollar index now. Dollar trades into resistance at 92. As IEF trades down towards support at around 114. And the Qs trade to support at around 300. So I think these are the three to watch. If the dollar fades from here and IEF holds support, I think the Qs rally and hold support. That increases the odds that the Qs do the same. However, a breakout in the dollar, to me, presents a headwind to risk assets, and in particular the Qs. So I think the dollar is at an inflection point. The Qs are at an inflection point. Treasury bond yield, the Treasury bonds are at an inflection point. These are three relationships that I would be watching extremely closely right now, and I continue to do so. And then finally, here's home construction. This is the home construction names. Take a look at ITB. Breakout, check back to the breakout level and hold as it trades above a rising 200-day moving average. RSI holding bullish ranges during the pullback, so that's compelling as it makes higher lows. And then on a relative basis, we have held support and are beginning to move higher once again. So if I kind of take that top-down approach, you can see how I back into a name like Toll, which I highlight in my note and on the show here for you today. So that's going to wrap us up. Head over to chaikinanalytics.com/test drive. Take us for a 14-day trial. Happy Wednesday, everybody. Thank you, as always, for spending some time with me. I will be back here with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.